Hello everybody, welcome back. Sunday, here we go. Woken up to a new local high on the 4 hourly here, which is interesting. Getting a rejection so far just around that 200 simple moving average, so similar kind of structure as what happened over here. Rejection on the 200 exponential, now it's the simple, and to be fair with you, there's not really any reason to suggest that this is going to fizzle out at this level. Looks like it wants to go for a little bit more, maybe even break out from here, which is pretty cool for anyone who's holding. Like I say, all my trading accounts sold up. Really, that's it. Hodl bag's a different story, but as far as trading is concerned, I did a micro trade from from here to here, about 5%. But anything else on top of that, yeah, I'm not really feeling it, and I'm absolutely there's no chance you'll see me going in on this trade, even though it does look like it wants to go a little higher. That effectively is FOMO. Remember the risk to reward. Remember the risk to reward. Now, if we take it over to the daily here, daily looks surprisingly good. Well, we'd need to see a daily candle body close above this the 20 moving average. Now, remember what moving averages do, right? So moving averages point to the direction of the trend. So most moving averages are kind of horizontal at this point. A few of the shorter term time frames pointing up, but the 20 is basically pointing down. So as much as we do look like we might close above this level, it could easily sink back down again. It'll take a little while for this to go horizontal and then turn up. So it's not as bullish as you think. Although, a further upside, yeah, I can absolutely see that. So if we take it to the weekly, the main thing to focus on here is you can see quite a nice, neat and tidy straight line around the 44,000, which I would imagine would be the area of resistance at this point. This is and has and still continues to look relatively good as far as candle bodies are concerned, but that is a major resistance. And honestly, I still stick with my original plan. Sell over here. It's okay to do some micro trades if you feel comfortable enough, but generally sell over here and buy probably somewhere around here much later on in the year. That's the expectation. That's what I'll be doing. So anything that happens today might be a matter of basically FOMO, Captain Noobmaster style FOMO towards that $44,000 zone. So as far as consolidation is concerned, all momentum continues to consolidate on the weekly. Like I said, the daily is potentially offering what could look quite bullish on the face of it. And the 4 hourly, as we started with, finding a rejection here, there's obviously the $44,000 zone. Pump signal will be generated at some point next week if it stays at this level or higher, which would be interesting. But the money flow index is already saying I'm quite hot over here. And money flow indexes are usually an okay way to navigate how much further it's got to go on that particular time frame. Most of the time we get rejected before we get outside of the comfort zone, and it doesn't spot the absolute top, but it's quite good at navigating pumps. So obviously it's quite high here. We've got a high read over here. Obviously it's spiked up to the high, but a new local high, but they were wicky and they came down. This one did the same, down again. Obviously this one more or less consolidated from there. This one didn't get the absolute high, the bearish divergence did, and then basically down. So whichever way you cut it, when you get this high on any time frame, you should be looking for a pullback, consolidation, dump, or something along those lines. Doesn't mean that this is the absolute peak, absolutely not. I'm saying that there is a chance that we see the 44,000, and that could easily be the peak. We can even go higher than that, and there will be the peak. Either way, the risk to reward is not good. It's not been good for a while. It's absolutely not good now, where I'm looking at basically a downtrend continuing, and this could just be another portion of a death cross retest, but rather than being on exponentials, it's on the simple moving averages. Moving over to Ethereum. Same vibe really, just a weaker chart. We could easily see this move up. We got a rejection on the 50 exponential yesterday. The 200 is up here at 2,347. Simple moving average 2,371. So really not much between it at all. And yeah, we can see a move up to there and a rejection from there. Pullback, continuation down. That would be the vibe given the death cross. Ethereum still has decent chances of doing epic bounces from the 2,150, but if you do lose that, the next and the last step of dead cat bounce, or maybe even V-shaped recovery, but definitely a decent bounce, would be given to us around these areas. 2,000 flat or 1,949. So those areas should offer a bounce, a serious bounce, and one that would be worth playing, especially because Ethereum trades at such high volume that, you know, if you're using like loads of money, basically, if you've got large market orders you need filling and sell, you know, getting in and out, you can slip in and out of this pretty quickly with you know, lots of cash. So it's definitely an appropriate chart to trade just based on volume. But outside of that, I'm still definitely looking for all of this to come back down over time, and I really don't want to get clever, or try to get clever, should I say. And I would deter anybody from FOMOing in at this area, because this does look and feel, and as far as every aspect of this chart, it's definitely looking like a temporary peak in the market. And I think there's as much, if not more, to go down than there is to go up. So the risk to reward is not good. Right, same old boring stuff. I'll leave it with you there. If you want to join the Telegram, links in the description, Patreon as well. Otherwise, hope you have a nice day. Take it easy.